Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We are on the search for value stocks once again, and our tour guide is Tracey Ryniec, value stock strategist at Zacks.com. I thought that was kind of an interesting way to set this whole thing up, especially since I've never heard of this first company that you're going to be talking about, Teck Resources Ltd, TCK, the ticker symbol. You tell me it's a mining company.
It is. It's one of Canada's largest miners, actually.
Canada. What do they mine for in Canada?
Well, they have mines all over, but I mean, they do have some in Canada, but it's copper, coal, zinc, things like that. They're also in Chile and Peru, United States, so they're in pretty stable areas, which is good for the miners because you never know how things are going to turn out.
Right.
And yeah, I mean, the miners are kind of hot right now. This is a Zacks #2 ranked stock now. It was a #1 when I wrote about it last week. Just want to point that out. But, you know, Teck is looking up because the underlying commodity costs have gone up. So copper, which is one of their bigger items that they mine for, the price has soared 73% in the last year. So obviously that's going to hit them on the bottom line.
Yeah.
They have they did miss on estimates this last quarter, but like I said, things are looking up. They took a big loan out to get a big coal company about 2 years ago, right when the financial crisis hit, and they've been slowly paying that down. They had to stop their dividend, but the CEO recently did tell Reuters that they're going to restart up the dividend, or they're looking to soon, shortly. They didn't say when. So that's a positive thing for a big company like this. Also, you know, estimates are really jumping for the full year now because of the underlying commodity prices surging. So you're seeing big gains in both 2010 and also 2011 here. The stock price, it's gone up. It's still obviously a value play here. It's about 13 times earnings, which isn't super expensive for this kind of company. You know, the chart looks a little scary coming off that March 2009 low now, but like I said, it still has the good value characteristics, and as long as the commodity prices stay higher, this kind of company will see it in the earnings growth. Okay.
And the next one, Joseph A. Bank Clothiers, JOSB, the ticker symbol, Joseph A. Bank.
Yes.
Yes. All those commercials that we hear here in the Chicago area, they really stick in your mind.
They do, and the commercials are working. This is a retailer that makes the men's suits and tuxedos and things like that. I think they used to make women's clothing. I remember them making women, but it's not their big market. It's men.
Yeah.
And you know, they're in 42 or 43 states. They have this 100% guarantee plan going, but in 2009 they actually saw record sales. While all this was, you know, with the economy going on, that's really impressive for a retailer, especially one that makes a lot of suits and things like that.
Well, they've got a great marketing strategy, merchandising strategy.
They do.
You know, buy one, get one free, buy one, get three free.
They do.
I mean, how can you miss?
I mean, I want to go in there. Like I said, I don't think they even make the women's clothing anymore. So yeah, I mean, they had the record sales up 10%, same store sales were up 6% in 2009. They just reported on March 31st for their fiscal 2009. So we do have some recent data for them. The estimate picture, I mean, they've surprised 4 quarters in a row now. They surprised big this last quarter, which was their holiday quarter. But, you know, analysts can't keep up with kind of what the company is doing, and that's a good thing. Their bottom line, they have like $21 million in cash, and they have no debt either, which is also kind of very interesting for a retailer to have right here. And the chart, I do have to say, is a little crazy. I put up the 10-year. It's really soared in 2010. The story has been great with them, but it's gone from around $40 a share up to $60. It looks a little frightening. It's at all-time highs, but it's trading around 14 times earnings. That's not real expensive, especially compared to a lot of the retailers, which are much more expensive right now, like 20, 30 times.
Not in fear of getting top-heavy here?
Not yet, but I would kind of watch the stock here because the chart looks a little scary. But the fundamentals are really strong on Joseph A. Banks right now, and you got to kind of like them going forward.
All right. Do you own either of these two?
I do not.
Check out other value stocks that Tracey's written about in the recent past, and other Zacks Rank Buy stock pick ideas on our homepage at Zacks.com. Over in that upper right-hand corner, we put 4 new ones up there for you daily. With Tracey Ryniec, I'm Terry Ruffalo.